right, everyone. Well, we are in for an absolutely massive Q&A today. I'm catching up from last week and actually a little bit further behind than that. So without further ado, let's just go ahead and dive right in. Number one, Matt, two quick questions. If I'm in a trade and the spread is 3 or 4 at the time of entry, and along comes a major news announcement, and with it an increase in the spread to say 10 or 12, does my spread change or will it stay the same as entry? Also, please forgive me if you exhausted this next question with the extensive responsive, but I'm still having a hard time being able to analyze the volume bars for various market conditions. Okay, number one, when a news event will come out, you'll typically see the spread increase for just a few minutes. It's rare that you'll see the spread increase and last for, say, an hour or 2 hours. Really, what the brokers are doing is protecting themselves from people like us who make money off of news announcements. I know, as crazy as that sounds, the brokers, remember, are trading for the most part directly against you, and they have to compensate somehow. They will widen their spreads, they'll steal stops. All bets are off when it comes to news time. Just know that it will adjust. As far as the volume goes, today was actually a really good example. You're looking at the British pound on an hourly bar. It's Tuesday afternoon, about 3:40 in the afternoon Eastern time. And I'll go ahead and freeze the screen here, and you can see that there's some pretty big volume. Okay, the average is down here. You can see that the volume was lower on two incidents or two trading sessions, one on Monday and the other on Friday. So there's a pretty good dose of volume right here. What you have to remember about watching volume is it's not a predictive tool. In other words, there's no way that you can see into the future. You have to wait until the bar closes to have a good idea about what's going on. But remember, that's exactly what we want to do. And you have to follow the progression of the trade. First of all, you have a potential setup. Okay, in other words, you have to have a reason to get into the trade. Once you have a reason to get into the trade, then you can start looking for the signs that professional money is active. Now remember, just because there's high volume, that doesn't necessarily mean that professional money has to be active. The point here is that if there's high volume, then that's an opportunity for the professional money to get in there and to make their operations. Okay, now somewhat of this is the professional money waiting to see what happens in the market, and some of it is the professionals creating the activity. In other words, if you get a big volume spike in the market like this in 1 hour, say here, well, the professional money might come in after that and try and position themselves to take advantage of the fact that they know the market makers are now either long or short. So they may come in to make a little bit of money off of that by buying. So in other words, if the price has been falling, okay, remember, if price is going down, that means somebody is selling. So if price is going down, the professional money knows that the market makers are now long, which means that they're going to try and push the market up, get people to sell in order to cover some of their position. Okay, let me go through this again. When the market is going down, okay, the market makers, the banks, the brokers, they are getting long. Okay? And in order to make money now off of these long positions, they have to push price up. So they will attempt to push prices up to induce people to come in. If they see stops building in this area, people are going short,